This video is how to trade crypto on Bitget. We're going to go through this screen right here, what it all means, and actually how to place orders on here and how to place some very simple technical analysis on the chart right here so you can get better prices for your crypto. I'll leave timestamps for everything down in the description. I'll also leave a link to Bitget as well. They do deposit bonuses and sign up offers regularly. So check that link in the description if you haven't got an account yet, and then we can go ahead and trade on Bitget. If you don't have a Bitget account yet, I'll also leave a link to a video, which is a step-by-step beginner's guide, which goes through getting set up and getting fiat and cryptocurrency on the platform as well. But we want to get right ahead and actually trade crypto. The first thing is you can actually buy crypto right here. If you go to bank deposit, there are a few fiat currency supported via bank deposits, or you can go to third-party payment. For right now, they're actually giving 0 fees, so you can pay via a card and actually get fiat currency on here. If you want to deposit cryptocurrency, then you can also do that. Again, I'll leave that for the beginner's guide video in the description. Once you are set up on Bitget though, and you actually want to buy some crypto, come to the spot market. So we can come up here to spot and then just spot trading, and it brings us through to this page. Now for right now, you can see they're actually doing 0 commission trading in the spot market on the whole entirety of all of the trading pairs. It's a great offer. I'm not sure how long it will last, but for right now it's 0 fees. So that's a bonus anyway. But what we want to do now is look at the system right here and understand what everything actually means. This is actually very similar to the professional trading systems that I used to use when I was working in the industry. So I'll just go through it right here. Up in the top left, we have the currency pair that we're trading. So every currency pair has a currency on the left and a currency on the right, as you can see here. This is the base currency, and this is the quote currency. The base currency is 1 unit, right? So when we're looking at the price of BTC, which is Bitcoin, this is 1 unit of Bitcoin, and we're quoting that 1 unit of Bitcoin, which is 1 coin, 1 Bitcoin. We're quoting that in USDT, which is a stable coin of the US dollar. So the USDT price is always going to be $1. So what we're doing right here is quoting 1 BTC in US dollars. And right here, you can see the last price, which is $16,566. So we know that Bitcoin is trading at around $16,500, $16,600. So that's the last price. And you can see this is changing. If we actually come down to the order book on the right-hand side, you can see that will correspond with the actual price of Bitcoin in the market. So this is the actual price that people are trading Bitcoin at. And whenever a trade goes through, then this will obviously be the last price, as you can see here. Now you can see the change on the day. So this will be a 24-hour change, up 2.5% almost. We have the trading volume here, and then the high and the low price of the last 24 hours. So the low price of Bitcoin that it traded at in the last 24 hours was 15,663, and the high it traded at was 16,631. Just some trading information for you. Now on the left-hand side, if you actually want to go ahead and trade something, you will always just search for it here. So I would always suggest getting some US dollar tether onto your account because this is a US dollar stablecoin and all crypto trades against it. Other stablecoins are in use as well. USDC right here, which is another US dollar stablecoin. You can get either one on the platform, but most people use USDT, and that has the most volume in terms of trading pairs. So I would recommend that. Now, you don't have to do this. You can obviously trade one crypto for another as well if it's supported on the platform. So what we'll do here is actually search for a crypto. So I'm going to search for BTC. Now that's the ticker for Bitcoin. Now if we come down, what we can see is we can see all of the US dollar tether pairs. So everything is quoted in USDT. Now this is the actual Bitcoin right here, and you have WBTC as well. Now wrapped Bitcoin is a different version of Bitcoin that is on the Ethereum network. And so it's not the real Bitcoin, but if you want Bitcoin to withdraw on Ethereum to use in decentralized finance and some DeFi apps, you might want to buy that one and actually withdraw it. But for most people that just want to buy and hold actual Bitcoin, BTC is the ticker. Now, if we can look at other tickers as well and other crypto projects. We have Matic right here, which is Polygon Matic. As you can see, we have the pair here. What we can do as well is just click on all and see if there are other trading pairs as well. So if we click on all, you can see there's 2 trading pairs here, one against USDT and one against USDC, both stable coins. If we look at Bitcoin, we can also see that Bitcoin trades against a few other pairs as well. So you can search for the crypto that you want to trade, click on it, And then up over to the right hand side, it will change to this pair and all of the trading information. You can also actually have some favorites here. So you just star them, and I've got Bitcoin and ETH right here. And you can go to all and you see all of the different trading pairs right here, as you can see. So what we have on the right hand side is the order book. Now the order book is just a book of orders, simple enough, and you have sellers and buyers in every market. So on the bottom, these are all the buyers, and then on the top, these are all the sellers. Now when a buyer and seller meets and comes to the middle, that is a trade, and that's the mid price and the actual price of Bitcoin, and you can see it's trading at slightly different prices here. Now, just like anything, this is a market, right? And so you have people that want to buy at a cheaper price, they're down here, and and some people want to sell at a higher price, and these are up here. You'll see that the actual prices are slightly different, with lower prices down here and higher prices up here. Now, this is important for certain types of trades that we want to go through, and I'll go through those later on in the video. But that's very simple, right? So we have all of the currencies that we can trade. We have the charts of them and the order book on the right-hand side. This is where we put in our orders. And then as you can see, this is just a list of our orders down here in terms of any open orders that we have or any trade history that we have as well. Bitget uses something called TradingView, which is industry standard. It's a charting software. It's actually totally free as well. You can go to tradingview.com and use all of their charts for free. There is a paid version of it, but most people don't need it, and you actually get it for free within Bitget anyway, which is really great. Now you can change this layout around if you go to settings, and then you can choose the chart layout. I'm going to keep it on this one for now. You can choose dark or light as well. But we have the chart right here. So what we can see is the time aspect of the chart, and definitely candlesticks as well. So we can change all of this. So if we go to chart properties, you can change all of this to whatever you want in terms of the colors and the candlesticks, and the style as well. Now you can choose any style of chart that you want, for example a line chart, and you can see that changes here. Traders don't use line charts. They don't give enough information, so we're going to go for candlestick charts, and I'll show you what that is now. But I just leave everything as is. The color scheme is good for me, and the time scale right here, it just shows you a time scale of each candlestick. Now a candlestick just gives you a period in time. So each candlestick right now is 1 day, as you can see here. But if I change it to 1 week, you can see the chart changes, and I can right click and go to reset chart. And then as you can see, this is the chart. Now each candlestick now is 1 week in length. And that changes a lot of the candlesticks, obviously, but now you get a much longer time frame. Now, what the candlestick chart is telling you, if we zoom in, is it's giving you a low price, a high price, and an open and close for that time period. So what each of these candlesticks is telling me is, right here, we have the price of the open of this candlestick, which was 48,000. And then at the close, the price was up here at 54,000. Now, because the price went up during this week, they color the chart in green, or in this instance, blue. Now, red is obviously to the downside. So as you can see here, this would be the opening price here at 57. During the week, the price went all the way down to here at 42, and then actually finished the week up a little bit from that low price at 48,900. Now, because the low is lower than the high or the open, that's obviously a down week for the price, and so they color it in red. So that's this candlestick, and it gives you a lot of trading information for that time period. But I can also go down to something like the 1 hour, and you can see that these candlesticks now are 1 hour in length. Now, when you're trading, it depends who you are as an investor and a trader as to what you're trading on. But if you're day trading or trading short term, then these short term candlesticks are going to give you more accurate info. If you're trading on the long term, then you might want to look at a day candlestick or a week candlestick. Most people will choose day and then change around depending on what type of trader they are. But we can very easily change that around, look at the price and see over certain different time frames what's actually happening to the price. You can also see some lines on the chart, and you can put these on as you want, but I use moving averages. Moving averages are really important to smooth out the price and show us trends. So I've got 3 on here. I've got a 50 period, 100 period, and 200 period. Now, when you change the time scale on the chart, that's going to change the periods as well. Remember, we're on a day chart right now, and so moving average 50 is 50 days, 100 days, and 200 days. Anything 50 and below is short term. 50 is a good number though. Or you can do like 30 days if you want a month chart, right? So you get a month moving average. We also have 100 periods, which is like medium, short to medium term. And then 200 and above is long term. So These are just going to give you smoothed out average prices over the short or long term, and that's really important to to see what kind of trend that we're in. Now, if the price is underneath these, we're in a downtrend, and if the price is over these, we're in an uptrend. So you can definitely clearly see uptrends and downtrends. So you can see right here the start of an uptrend where the price is actually above these moving averages and is starting to bounce off them in a bullish fashion. So that's an uptrend. And you can see that the price remains in this uptrend the whole way above all of these moving averages. Now, a downtrend is the exact opposite, where the price is actually being forced lower all of the time. And you can see that when the price does rally up, just move this a little bit, you can see when the price does rally up, it actually meets resistance at these trend lines and kind of falls further down, right? So that shows you uptrends and downtrends. And you can very easily see that on the chart. So when you're looking at buying, obviously you can make your decision on, do you want to buy within an uptrend when the price falls back down to the trend, or do you actually just want to wait for the trend to actually reverse? We're in a downtrend right here. So do you want to wait for the trend to reverse, or do you just want to, dollar cost average when we're in downtrends instead of uptrends? That's obviously up to the individual trader, but these moving averages are very simple to put on the chart. You just go to indicators right here, put moving average in here, click this as many times as you want moving averages. So click it 1, 2, 3 times. And then you go into the moving average here, go into settings. You can change the color, the style, and even the inputs as well. So if you want to change the length of the moving average, just do it here to as whatever you want. But as you can see very clearly on the chart, these moving averages actually show you the trends and show you where the price is bouncing off in a trend. So really important to know. The other thing to know is check what moving averages are crossing over each other. So what you can see here is that the longer term trend, which is purple, is right down here. Shorter term 100 period is up above it, which is obviously bullish. It shows you that the short-term momentum is bullish to the upside, even stronger than the long-term momentum. And then the 50 period is even above that. This is showing us very strong momentum to the upside because all of those moving averages are above each other. Now you can also use moving averages to trade, where, for example, you can see right here, the price is moving towards these moving averages and getting rejected all the time. That's showing this weak price action, that we're in a downtrend. But if you see some of these short-term moving averages potentially moving up through the longer term moving averages, which it isn't the case here, but if we start seeing a move up, then that's showing us that potentially the price action is getting a little bit stronger again, and you might be more certain in a potential uptrend. And of course you can trade that as well. So moving averages are really simple, but they give you a ton of trading information. Another simple metric that traders will put on the chart is the relative strength index. Now, when you're trading, you obviously don't know where the price is going to go, but you're trying to predict that all of the time. So we can go over to the indicators right here and then type in RSI, or relative strength index. Just put that on the chart and you can change around the colors as you want. I'm just going to get rid of the volume here because it's making the chart kind of lopsided. So with everything, when you're looking at price trends, you're really unsure about what's going to happen to the price on a technical basis. All of that happens with fundamental analysis and everything like that, which is beyond the scope of this video. But with relative strength, what we can see is for any given price move, how strong is that price move? So it's not the actual amount of the move in terms of what price it gets to, but we're looking at the relative strength of that move, because we can actually identify potential reverses in trends. What I mean by that is, as you can see, what we had here during 2020, 2021 was a massive uptrend. Now, when people were looking at this price chart, they were probably getting really excited and thinking, wow, this is fantastic. We're hitting new highs on the prices. Everything's going great. Let's go in because the price is going up. But what you can see from relative strength of the move is getting weaker and weaker. Even though the price is reaching new highs, the price action is becoming weaker. Now, this is telling professional traders that potentially the move is actually starting to come to an end. And so if you're looking at relative strength of the move, you can actually get quite worried. This can help a lot of people out in terms of how strong moves are. So what you can see is right here, prices are going up all of the time and people are getting new highs. We had support here that went up. But as you can see from relative strength, this move is actually getting weaker every time, right? So there's a divergence between price and the relative strength of that price move coming down. And so that it tells professional traders, well, okay, If the strength of this move is running out, maybe we don't have much left of the bull market. And as you can see, the relative strength of the moves keeps going down, and then we eventually reach a top into a sell pressure there. So hopefully that explains briefly what relative strength is. It just shows you the relative strength of a price move, and you can definitely use it. So if there's a divergence here, definitely be careful when trading. Now, if there's convergence where you have rising relative strength into, you know, kind of rising prices here, you might get a breakout to the upside as well. So that's how to use technical indicators to show you the relative strength and momentum of certain trades, not just the price. And that's going to give you a lot of info. Now, I do cover this way more in other videos. I'll leave some helpful videos about technical analysis in the description that go through much more in depth of, you know, technicals and how to use RSI. The other thing you want to do before trading at all is to put some support and resistance levels on the chart. This is going to help so many people out when you can actually see potential areas that the price may get to. When you're trading, always put support and resistance lines on the chart to show you where the price potentially may move. Now, what we can do is just draw a trend line right here. So go to the left, draw just a normal trend line. And what we want to do is find areas where the price gets really sticky around and actually trades at for a long period. That is going to be what's called an area of value. And so you want to just identify these on the chart. The way that you can do that first is by looking at the chart and saying, where are these areas of value? So what we can do is identify them clearly right here. So anywhere that the price moves to and then quickly moves away from will be a support and resistance level. Support to the downside, resistance to the upside. This is one right here. You can see the price gets here and then gets rejected quickly. And you can see that the price actually, when it moves back to here, actually meets some resistance there as well. So you can see this price right here is a key level where the price is certainly finding some stickiness and finding it difficult to break through. Now, what you can see is that because the price was moving up into this and got rejected, that's known as resistance twice. But when the price does break through, you can see it actually falls back to this line, but then gets bounced off. So that would be support at this level. So the same price can be both support and resistance. It depends where the price is. Really though, it doesn't matter calling it either support or resistance. It just matters that this, whatever price this is obviously a very key level. So what we can do now is actually see where is that price level on the actual price chart. And that's going to give us some key info. So we go to draw our trend line. This is definitely a key area of support and resistance right here. So I'm going to draw this trend line on the chart, as you can see. Now, if we go over to the price on the right-hand side, you can see that this is around 10,000. Now, that makes so much sense because humans trade to price levels. 10,000 is obviously a key level that humans will trade around and potentially have a lot of orders around. And so that would be a key support and resistance level. You can do this for macro. So that is very, large key levels, but you can also get right in as well. So if you come down to the 4-hour chart and reset here, you can do this for micro trading as well, which is shorter term. And as we can see here, if we put the trend line on, this is definitely a key level here of support and resistance. Now we actually broke through it, but you can see we bounced off it a number of times. So this is great to know. And then you can see we eventually broke down through it. And so for right now, this is going to act as resistance. You can use these support and resistance levels to trade at, to give yourself more information about what prices that you think are decent. And if you're trading very short term as well, you can use these as areas where you might take profits or even, take losses if the trade moves against you. When you want to trade crypto, you can use the order panel to get all of your order details exactly the way that you want. So come to this order panel, and as we can see, there's different versions of what we can do. So the first thing I'm going to do is go to a market order. A market order is when you choose the amount that you trade, but you don't choose the price. A market order just gets the best price in the market at the time that you press the button. This is good if you want to get trades done, but you have no control over the price that you pay. So not great. What we can do though is put in the amount that we want to trade. So we have a market order here and it says best price. So it just gets the best price for us. We don't choose that. Choose how much USDT that you want to spend, whatever that is, and just press buy. Now, when you press buy, that order will go through instantly and it will trade at this mid price. That's fine. You got your order done, but there are better ways to trade. So we can actually go to a limit order. A limit order, as you can see here, lets us choose the price that we pay for Bitcoin. So what we do is we value Bitcoin in 1 unit. And so we have a 1 unit price, but we can trade any amount of Bitcoin. We can trade a fraction of it, so 0.001 or anything like that. So what we can do is choose a price that we want to pay. And the current quote is around 16,570, as you can see here. So you can put that limit order in and say, well, what do you want to pay? And we're going to pay, let's say 15,000. Now 15,000, we can't buy Bitcoin at that price because the market price is 16,500. So we're putting in an order that's way below the current market price. And so we're not going to buy anything, but the limit order will go into the system and will come right down here on the order book, waiting for the price to meet our price. It may never meet our price, and so we won't ever trade. But as you can see, you can choose just a price that's a little bit below and actually basically negotiate your order, right? So you're negotiating a lower price for BTC. What you can see is that the price does move around a lot. So what I would suggest is always just click a little bit below the mid price right here, get a little bit of a cheaper price, and then enter your order. And so you're just getting a little bit of a discount each time versus a market order. I'll show you this right here. So we can put in an order of, let's say, 14,000 per BTC, and how much BTC that we want to trade, 0.1. So you can see that's 140. So 0.01 BTC, we're spending $140. You can also put this slider up any way that you want. Now we have a GTC order, which is good till cancelled. So our limit order will go into the system and will only be cancelled if we cancel it specifically ourselves. Post only, this ensures that your order essentially either goes in as a maker order or doesn't go in. Now that gets a little bit complex, but a maker order is a limit order below the current price. If you put a limit order above the current price, then that's obviously a bad order and it will actually just go through at the cheapest price it can. But that is not what's known as a maker order. So maker and taker orders are essentially charged a little bit different in fees. And so that's why post only comes. If you take liquidity from the book, which is put in a bad trade and your limit order is up here, then you're a taker of someone else's order. And so you pay a little bit higher fees. You can actually put this on to basically prevent you doing that. And so if you have a bad trade and you input the wrong price here, it will kind of cancel the trade for you rather than going through with a market order. Because even if you put limit order and then you put in a very high price, it's basically a market order in that sense. Now, IOC is immediate or cancel. This means that if your trade and price cannot be filled and completed immediately, it will cancel the whole order. So for example, if we put in a price of 14,000 Bitcoin, $14,000 per BTC, we're not going to trade that right now because the price is 16,000. So our order will just be totally canceled and not go in. Fill or kill means either your entire order gets filled or the entire order gets canceled, right? So if you traded, let's say $1 million at 16,600 and there was $500,000 that could be traded, your order will be killed because you can't fill the whole thing. So you can choose these. For most people, good till cancelled is fine. But let's put in a limit order here. So we'll put in a limit order at 14,000 for $50, and we press buy BTC. We can confirm this. Now you can turn off this prompt if you want here. We'll just press confirm and you'll see my order comes down into the system. So it gives me all of my details right here. And of course we can't trade right now because our bid is way below the current market price. So we can't trade, but our order is in the system. It's good till cancelled. And then what we can do is cancel it right here if we want, or we just leave it in. Our bid is somewhere way down here at 14,000, but we can just cancel this. So I'm going to cancel it. And then that didn't trade. So what we can do as well is maybe put in an order a bit closer. That press buy BTC, your order will go in and then it will be working for you at that price. If the market price comes down a little bit, it'll trade for you. Check the Bitget link in the description for those deposit bonuses and sign up offers. Also, if you want the step-by-step guide and other helpful video guides, they're all in the description as well. I'm James with MoneyZG. Cheers for watching and I'll see you in the next one.